Firstly, this video is an excerpt from my mega analysis that concludes in a detailed stock market trend forecast into the end of 2023 that was first made available to patrons who support my work. So, for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $4 per month. Lock it in now, as it's set to rise shortly after the new year to $5 per month. What if someone told you where the Dow Stocks Index will be trading at in 3 months' time, and by that time the index was within 1% of where it was forecast to be? How would you value such analysis? Furthermore, without the benefit of hindsight, that forecast did not just end there but continued on for a further whole year. What's that worth? Given that many so-called analysts can't even go beyond a trading day. Well, that is what you are going to be in receipt of in this, the final part of my series of videos that concludes in a detailed Dow stock market trend forecast into the end of 2023, which my patrons gained access to on the 5th of October. That forecast that the Dow by now will be trading at 32,850 against the actual last close of 33,147, i.e. yesterday, 30th of December, which represents a less than 1% deviation against the trend forecast. That is the beauty of trend forecasts, as they represent the sum of one's analysis at a fixed point in time, and thus there is no hindsight, which is what one gets from the reeds that blow in the wind. Analysts which flip-flop between bull and bear depending on whether the market is up or down on that day. They do this because it's infinitely easier to look in the rear view mirror and explain what has already happened than it is to even attempt to clear away the mists of time in terms of trying to deduce that which is the most probable outcome, weeks, months, even over a year into the future, which to say the least is not easy, but still that is what I seek and undertake in my analysis and concluding trend forecasts. So again, for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $4 per month, which is soon set to rise to $5 per month for a new sign up. So lock in now at $4 per month, which is nothing. For instance, if someone did what I did, then I would gladly pay them $4 per month to be in receipt of all that I do. Formulating a stock market trend forecast. The character of this bear market has been changing since the June low. First came a break above 33.3k into the August FOMO peak, and then came the decline to 28.7k. That whilst a new bear market low was weak in trend channel terms. So what is going on? Accumulation, that is what's going on. Accumulating since the June low. It should be obvious that there is a lot of buying going on and market manipulation so as to allow it to happen. It's as though the wolves of Wall Street are leading the retail investor lambs to slaughter, as the retail crowd are dealt hammer blows in either direction, aimed at fleecing them of their wealth. The smart money is accumulating, all whilst MSM and the blogosphere literally paint a perpetual picture of doom and fear that they still sustain. Despite that, what we have witnessed earlier this week, investors are being conditioned to expect the likes of the S&P 3200 as though it's a done deal, when in reality nothing is a done deal. Furthermore, even though the purpose of this analysis is to conclude in the Dow trend forecast, I consider the indices to be a red herring, as it's all about the stocks. Many great stocks are trading at huge discounts to the indices. For instance, Qualcomm on a PE of 10, AMD 17, TSMC 14, AMET 11, Micron 6, Lam Research 12, and so on. This is what investing is all about: identifying good stocks and accumulating them when they are cheap. The indices are really just a sideshow, but they remain the focus of most. Having scoured this analysis a dozen times, what sticks out most in terms of weighting are: firstly, that valuations have moderated and will continue to do so, gone are the ridiculously high P's of late 2021. Secondly, a recession is brewing, due to hit the US during the second half of 2023, in advance of which the Fed will have completed its rate hikes to probably well below the market's worst expectations, i.e. they may not even make it much above 4%. Thirdly, that this is not really a bear market to me. It does not feel like a bear market. Where's the panic? Okay, so the UK did panic in September, but the decline in the indices has been orderly. The swings are orderly, muted even, as though engineered. This is evident by the failure of the VIX to spike, instead unnaturally has remained range bound. Fourthly, the bond markets have done their worst and look like they are bottoming. Fifth, seasonal analysis and the presidential election cycle are painting a compelling picture for a strong 2023. After all, a strong down year tends to be followed by a strong up year. Dow stock market trend forecast into the end of December 2023. Therefore, my forecast conclusion is that the bear market has likely bottomed and that the Dow is likely to trend higher into mid-2023, punctuated by the usual corrections, most notable of which will be at the start of the new year, as the Dow fails to break above 34.3k high, which would send the Dow significantly lower to at least 31.5k in advance of the next leg higher into June 2023 towards a target of 35k, beyond which the Dow will be facing headwinds from contracting earnings as the recession starts to bite that I expect will send the Dow lower. That will be followed by shrill cries that the bear market has resumed, which, given that the Dow has made a lower high, is possible. I expect this mini bear market to terminate during October 2023 in the region of the Q1 low, so around 31.5k, that will set the scene for a rally into the end of the year that I suspect will not be able to break above the earlier summer highs. Still, the Dow should end the year up about 5% and some 17% from the last close of 29,490, as illustrated by my trend forecast graph. 31st December 2022 update. Here's how the Dow trend has played out since my analysis and concluding trend forecast was posted at a time of maximum uncertainty, when expectations were rife of the S&P 3200 and lower, and still are. The trend forecast for where the Dow should be trading by now is 32,850. The Dow's last close is 33,147. That's a less than 1% deviation against the trend forecast. 3 months on, there's less than 1% deviation. So for immediate first access to all of my analysis trend forecast, then do consider becoming a patron by supporting my work for just $4 per month. That's nothing. $4 per month, that is nothing. And my forthcoming, you get access to all of my recent analysis apart from this mega piece, and the schedule of analysis includes US house prices trend forecast. That would be 3-year trend forecast. I already released a preliminary forecast, so I had to hit the pause button on that to focus on the stock market, but I've done 80%, so I've got a rough idea where it's going. I just need to finish it and fine tune it. That'll be my next piece, mega piece. And then there's regular analysis, updates on the state of the stock market portfolio. Then there's the global housing market I've got to do that about halfway done. Then we'll look at the detail, look at the British pound and US dollar, even though it is included in this analysis. I have done analysis of the dollar, which is important. And then I'll update the high risk stocks portfolio. There's two of them. There's the mid 2021 and the February 2022 portfolios. And I'll have a look at the crypto markets. Is there any sign of life there? Is it falling enough? I remember when I did the analysis last year, I was looking for around 83% drop in the Bitcoin price. Has it fallen by 83%? The high was around 70,000, so I don't think it's got there quite yet. And then I'll have a look at gold and silver, though it's not top of my list. And for Christmas, a special, how to get rich. This is not some garbage. This is step-by-step guide of what you need to do. There's no easy way to get rich, but I'll do my bestest to teach you how to get rich. Hardcore, no waffle, direct points, step by step how to get rich. That will be posted during Christmas. That's a mega piece. That's what I'll probably update that annually, as I add more stuff to it, because step-by-step guide. So for all of that, do consider becoming a patron by supporting my work for just $4 per month to get immediate access to all of my analysis and trend forecasts. $4 per month is nothing. And do remember to subscribe to this YouTube video for new videos. Gaining access to over 35 years experience, right from before the 1987 crash straight through to this stocks bear market that will ride the quantum AI megatrend into the future.
Should old acquaintance be forgot and never brought to mind? Should old acquaintance be forgot and all lang syne? For all lang syne, my dear, for all lang syne, we'll take a cup of kindness yet for all lang syne. For all lang syne, my dear, for all lang syne, we'll take a cup of kindness yet for all lang syne. For all lang syne, my dear, for all lang syne, we'll take a cup of kindness yet for all lang syne.
Yeah, hey, hold it. Yeah, the reflection.